Good morning and welcome to Understanding the New PPP Loan Forgiveness Application. I'm Todd Harrington, Managing Partner here at Trout CPA. I'd like to thank each of you for joining us on the webinar this morning, and especially thank you for giving us the opportunity to serve and assist you during these challenging times. While we've not yet received all of the guidance we'd like to have on the PPP loan program, we have received additional guidance in the past few days. The SBA has released a loan forgiveness application, which included some new guidelines that we'll be covering today. At the end of today's program, we'll have time for Q&A, so please use the Q&A button at the bottom of your screen to submit questions. If we're not able to address all your questions on today's call, we'll follow up with you to make sure that your questions are answered. We are recording today's session, and we'll be sending out a link following the webinar to that recording. Our presenters today are Karen Schenk and Dan Choden. They're members of our COVID-19 response team and have been working really hard to educate our team as well as our clients on various programs that are available to deal with this crisis. We recognize that many of you continue to face personal and business challenges like never before. We want you to know that our team here at Trout is here for you and committed to doing everything in our power to help you and your businesses survive and thrive through this crisis. And now, I'd like to turn the program over to Karen Schenk. Karen is one of our partners and a leader on our COVID-19 response team. Karen?
Thank you, Todd. So if you tuned into our last webinar, you probably heard from Robin and Jason as well. They are still here and they are working behind the scenes. So Todd mentioned that there's a way to ask some questions. You should have a button on your screen that gives you the opportunity to ask questions throughout the webinar, and you can use that and ask questions, and Robin and Jason are going to be answering your questions as much as they can. So like Todd said, not everything has been clarified, but what has been clarified, we'll do our best to answer as quickly as we can. And whatever doesn't get answered, we will try to formulate another FAQ page as we had in the past, which will try to address any questions that you have. And I know that these COVID times, we've all gone through a lot of changes in these COVID times. I know some people are growing beards, some people are letting their hair grow out. Robin kept telling me that his camera wasn't working, so I couldn't see a picture of him, but I did find a picture of him post-COVID, and I thought I would share it with everyone. There Robin is. As everybody knows, I'm sure most of you know that the tax season hasn't ended yet, and even though it was supposed to. So July 15th, at least, is where we're headed, and Robin has been dealing with this. And he's dealing with it very well, as you can see. So Jason, though, not so much. He's a little more disheveled, but he's in good spirits. So the two of them are going to answer your questions here as we go. And the next slide, I think, has our agenda. So what we want to talk about today is what Todd had mentioned earlier, some of the clarifications that came out in the application. And then we have a tool. Dan has developed a tool to help you estimate what might be forgiven, and he'll also go through some ways you can tweak some of what you've been paying people, or some of the options that you have to maximize the amount that you can have forgiven. Next slide. So the first thing I want to talk about today is the payroll costs. We had a lot of questions that were related to the timing of the payroll costs. As you are probably aware, your covered period begins the day after your loan was funded. So if your loan came to you, it was funded on May 3rd, your covered period, your 8-week period, starts on May 4th. What they clarified in this application is the election to use a more simplified way of calculating your payroll costs for that period of time. So the alternative payroll covered period begins when your next payroll cycle starts. So if your loan was funded on May 3rd and your next payroll cycle starts on May 10th, you can elect to have your 8-week period start on May 10th. And what that helps us with is that we have a clean start date for our payroll and payroll related costs. Now, if you make that election to use that alternative covered period, you must use that for all payroll related costs. That is your health insurance, your retirement funding, anything else that is related to your payroll, you have to use that same covered period. You use the original covered period still for all your non-payroll related costs. So just because you use this alternative covered period timing for payroll, it doesn't change your 8-week period of time for all of your non-payroll related costs. So that was a nice gift, I think, from them to help with administrative costs. And the other thing I want to mention here is that at the end of your 8-week period, there's no need to do like an additional payroll that ends exactly on that last day. So there was some concern about having to do a final payroll to capture those costs. At the end of your 8-week period of time, as long as you make your next payroll as normal, you can prorate those days that were left at the end. So you're still going to get that full 8-week period of time. The other thing I wanted to mention is that there was nothing carved out for bonuses or hazard pay. There was some concern that they were going to tell us that we could not include payroll related costs that were like bonuses or hazard pay or even severance or vacation time or that sort of thing. Those have not been carved out, so that was good news. We still have to exclude any costs related that are covered by the FFCRA. So many of you have had some payments to your employees that were covered by the FFCRA, and those amounts need to be backed out before you can calculate the amount of payroll costs that can be forgiven. The other thing that was clarified was that the limit on employees that make over $100,000 a year, that was prorated for us. They actually put the number in the application. You cannot include more than $15,385 per employee, and that is just payroll. It doesn't include your health insurance, retirement. That's on top of that. The wages. The limit on the wages itself is $15,385 per employee. Next slide. The next thing that they talked about was full-time equivalents. Or next thing I want to talk about, full-time equivalents, FTEs. This was a major change. The original act itself mentioned the ACA, and in the ACA, the Affordable Care Act, we were to calculate FTEs based on a 30-hour work week. So that's what a lot of our guidance was coming from there, and they changed that to 40 hours per week. So some of the planning and calculations that we did around 30 hours a week, we have to just change that to 40 hours a week. And and then they did give us some additional exceptions. If an employee, if you have given a written offer to rehire an employee and they reject it, that should not count against you. And so you do not need to reduce your FTEs by that. In addition, if anyone was fired for cause or voluntarily resigned or requested a reduction in hours, you also do not need to reduce your FTEs for that, for those individuals. And Dan will show you in our updated template, there's some places for you to add those back. They also gave us a simplified method, and even though it is simpler, it adds a level of complexity to it, because now instead of having to calculate it one way, we have to calculate it this way as well. And the simplified method is, if you have an employee who worked over 40 hours a week, you get to assign them 1 FTE. And if they are under 40 hours, they get a half. And so that'll probably benefit people who are employers who have a lot of staff who are very part-time, meaning less than 20 hours a week or so. And but beyond that, it's probably going to be better. We're all going to have to kind of look at both options to see which calculation provides the fewest number of reductions to the FTE. So even though there's a simplified method, it's just one more calculation that we have to make to decide which way is the best, that provides the most forgiveness. This is in here. This really hasn't changed. The safe harbor method still applies, meaning that if you hire everyone back by June 30th, then you do not need to go through the whole FTE calculation to apply a reduction to the loan amount. Next slide, please. Some other clarifications, the timing of costs, just like I mentioned on the payroll, where we don't need to create a new or a special payroll for that last those last few days after or at the end of the payroll, just to get it in the 8-week period of time. The same is true for like rent expense or utilities or other things that are an interest expense. The non-payroll costs that are allowed under this calculation, as long as you are paying them within that 8-week period of time, they count towards your forgiveness. And then at the end of the 8-week period of time, instead of having to make a special payment for rent right then, you can prorate the however many days are left in that 8-week period of time and include that in your calculation to come up with the amount that can be forgiven. The other clarification was the 25% reduction in wages, and what we wanted to mention there is that, one, it's calculated by employee, and which I think is sort of how we had it calculated in the past. And the other thing to clarify here is that it's a reduction in the pay rate, not the amount you're actually paying the person. So the distinction there is, if you were paying somebody $100,000 a year last year for full-time, and you're paying them $50,000 a year this year for part-time, that's not a reduction in wages. that's a reduction in hours, and that would be captured by the FTE calculation. But the wages itself, the rate that you're paying that person hasn't changed at all, and so it would not be it wouldn't be part of this calculation, and it would not count as a 25% reduction in wages. So those are the two things we wanted to clarify there. It's by employee and it's based on rate that you're paying them, not on how much you're paying them in total. The other thing to clarify is the owner compensation. The owner compensation is still includable in the loan forgiveness application. However, it's the lower of what you paid the owner for that 8-week period of time, or an average of what you paid in 2019 for that 8-week period of time. Not that specific 8-week period of time, but last year's wages, so 2019's wages divided by 52 multiplied by 8. That would be your last year's wages for the 8-week period of time. And so even if you paid the owner more than that last year, or more than that this year, you have to use last year's number. So it's the lesser of the two. So you can pay an owner more in this 8-week period of time as long as it doesn't exceed what it was in 2019. I mean, you can pay them more, but you won't get credit for it. You only get credit for the lower of the two. Next slide, please. The other couple of things we wanted to point out, these were not part of the what came out in the last week, but we thought it was important to explain or highlight here. And that is that we were told at the very beginning of all of this that the loan that is forgiven will not be taxable, and that still is, that's how they're saying it. You know, it's not a taxable event. However, the expenses that you're paying that result in the loan forgiveness, essentially what they're saying is the expenses you're paying with the money that came from the loan that you won't ever have to pay back, those expenses can't be deducted on your tax return. So you're essentially getting the same place where the loan is being taxed, and there is some buzz about whether or not that'll get changed, whether that was the intent or not. So we are still waiting for that to kind of be overturned if possible. And then the $2 million safe harbor, there was a lot of buzz about that a couple weeks ago too. And what that relates to is that if your loan was for less than $2 million, there is a general assumption that you're a small business and you needed the money, and there isn't, at this point, they said there won't be any additional scrutiny over whether or not you needed the money, and so you wouldn't have to really worry about somebody coming in and pulling that money back. If your loan was over $2 million, the SBA does plan to review it. Not sure what that looks like yet, but the only penalty for if they do find that you did not need this money, then the penalty is to just pay back the loan, and we were a little concerned there'd be fines or other things surrounding that, and it looks like the penalty for that is just paying it back. I think that's all I had. Next, we have Dan. Dan is going to walk us through the forgiveness calculator that he came up with, which we're all very grateful for because it, I think, is going to save us all a lot of time. And so he's going to go through the forgiveness calculator, but also the application itself, which is, I think, will help us all as we digest everything as we move forward. So thanks, Dan.
Thanks so much, Karen. Appreciate you going through those changes. So within our slides here, and we're going to be distributing these out. And then also on our website, we've updated a few of these tools that we have out there. The forgiveness calculator that we've been using before, we just revised that for a few of the changes in the calculations that are underlying the whole thing. So if you really like that format that we were using before, that is up to date. We're not going to be looking at that today, though. We've taken what the SBA gave us in its forgiveness application itself and used that format to create a new tool so that we could follow along, so we could have something to attach to the application itself and make that usable and practical. So we're going to take a look at that. We're also just going to walk through the application here itself just really quickly. So hopefully this is going to come through for everyone all right. I didn't get all of the application and the Excel documents into the slides. It's just a little bit of a tough challenge to do that. So I'm just going to be going through them on my screen here. The forgiveness application is 11 pages long. Very useful, had a lot of good changes like Karen said, but it can be a bit tedious to try to walk through. We're jumping between pages, we're jumping back and forth to definitions and to how to calculate this stuff. So you're going to need these 11 pages, but we can't just use those in a vacuum, and that's what the next tool will be. We'll look at that, mirroring what's happening in the application and walk through an example to make it a little more practical. But I think everyone, if you haven't printed this already, if you haven't saved a copy, you're going to want to have this handy. For some of the banks, this will probably be the form that we'll be filling out, particularly probably for the smaller banks. Maybe the larger ones will turn this into an online portal to be submitting. I'm sure everyone will be a little bit different, but it will be this same underlying information and process. So we'll first just go through the application itself. It's probably about half of this is the definitions and the line-by-line instructions, and then the other half are the actual calculation tables themselves. So I'm not going to read the whole thing, but I did highlight a couple of key points and just want to cover a few things as we go through this. Here on the first page of definitions and instructions, we talked about the 2 covered periods that we can have now. Huge change, very welcome change, as Karen pointed out. So we can be able to simplify our process of capturing our payrolls and not have to prorate our first and our last payroll. We can just have the payrolls that fall within the 8 weeks count and use those for our FTEs and not have to slice and dice that information. But as was mentioned already, this simplification isn't just a simplification, it's also a complication. We can't just pick a alternative period. We still have to use the covered period for everything else. So this is just an alternate payroll period. Cover period still applies to your rent and interest and utilities. So another thing just to emphasize once more here, these instructions keep going through. They go from definitions to line by line instructions here. One other piece that I want to point out here on page 2 is just going back to that incurred and paid piece. And this is something that we just need to keep wrapping our minds around, understanding the conversations we may have had of, wow, maybe we'll put a payroll date on the last day of our 8-week period. It was just going to be a nightmare. It was going to be a struggle to try to get all this done. Well, we've gotten the exception here that we can pay after the 8-week periods as long as those costs were paid during, as long as this is paid on or before the next payroll date. So a huge sigh of relief there. Every payroll company in the world is really happy that they don't have to try to move all this stuff around and make it work. We can just keep paying things on our normal pay schedules and it'll work for the 8-week period. And then just reiterating that same thing again for the non-payroll costs. As long as this is paid on or before the next regular billing date, that's going to count. Even if it's after your covered period, we're going to be able to get those costs if they were incurred in the 8-week period. And Karen gave us a great example of that. So those were some key things that we highlighted here within the line-by-line instructions. Page 3 of the application is where we actually start filling things out. Enter in some basic information to start, and then some loan information. Most of this is just informational, but a few things certainly are driving where we're going with our calculations. And of course, our loan amount is key to be able to see how much we can have forgiven. Of course, our disbursement date is going to be driving our covered period, and then from there, our alternate period as well. So these aren't necessarily pieces that are falling directly into calculation, but it's all affected. A couple of things here I want to just point out is there is a couple lines here for employees at the time of the loan application and employees at the time of the forgiveness application, which is just a strange thing. We have to calculate full-time equivalents elsewhere to know if we have reductions or not. But here we're just saying number of employees. Doesn't really seem to fit the calculation itself. So my thought surrounding this was, well, this probably goes back to the initial application itself. To be able to qualify, you had to have 500 employees or less in most circumstances. So I think this is just probably a recertification that you even qualify for the program at all, that we're not a large employer, we're a small employer for the purposes of the PPP. And that is just employees, not full-time equivalents there. So I think that's what that piece is getting at. The other one I want to just mention down here, that seems like redundant information, is they have a line saying, check this box if your PPP loan is in excess of $2 million. Because as Karen mentioned, there's going to be additional scrutiny over that level and a safe harbor below that level. We don't have to worry they're going to come after us for a bad certification of need. But why do we have this here? It's very easy for the SBA to see our loan amount is above or below 2 million. Well, reading between the lines, I think this is really for us to tell them that together with our affiliates, we might be over that 2 million threshold, because otherwise the bank, the SBA, no one's going to really be able to be aware that these multiple applications we might be filing for multiple businesses are really related businesses. So most of us maybe just have one business, but some of us certainly have related entities that are owned by the same owner or group of owners. So if you have that situation and have significant loans, we just want to make sure we understand that affiliation. These affiliation rules are unique to the SBA. They aren't the same as the IRS rules. So just want to be aware of that. And that's, I think, what this checkbox is getting at. We need to highlight ourselves if we are above that level combined. Bottom half of page 3 here is where we get to the good meat of this whole thing. What is our actual calculation of forgiveness? So by now, I think we all are pretty well aware of this. We have our payroll costs, we have our interest costs, we have our rent costs, our utility costs. We can summarize all of our qualified costs first. And then in our next section, we see if we may have any reductions for cutting people's pay rates, for reducing our full-time equivalents, our head count. We take any reductions that we have there, and then we are calculating their forgiveness. And of course, that forgiveness amount can't be in excess of the loan amount itself, and also cannot be more than is calculated with this 75-25 rule. Your forgiveness amount that you certify, you can't claim more than 25% of that forgiveness amount for non-payroll costs. And that's what this line 10 is accomplishing, just in a mechanical way. We're making sure that that 75-25 rule is met. I'm just going to keep moving through the application here pretty quickly and then get into an example. The next page, page 4, is all of our certifications. We certified on the original application. We're certifying again now that we've used the funds for their purposes that they're intended to be used for, that these are real expenses and that we're doing this all properly, that we've done our documentation, we've done our calculations the best that we can here. So we're going to go through and initial these certifications, sign and date, and that's page 4. The next page gets into instructions for our next schedule. Of course, we can't just have a one-page application. That would be far too simple. So we have the calculation, we have Schedule A as well, and some line-by-line instructions. I just wanted to go over and highlight the key change here, as Karen already mentioned, but to emphasize it again. For owners, this amount is capped at $100,000, which is a $15,385 is the 8-week equivalent. For each individual, we can't claim more than that per owner. But we also see this as that or the 8-week equivalent of compensation in 2019, whichever is lower. So just really want to reemphasize that point. We can't be trying to put more money in our owners' pockets than they've been getting already. So we can't increase that and see any benefit from the forgiveness. So that was a key change, and that's where that came out. Skipping over most of these line-by-line instructions, we'll get back to these schedules as well and our example. Schedule A is the combination of a few calculations and also the summary of other information that comes from another schedule. Our PPP Schedule A worksheet flows into the Schedule A itself. So I'm not going to spend a lot of time on this one. We'll see how it flows up in our example, but going line by line isn't going to be useful for us at this stage. Next is our instruction page for the Schedule A worksheet. I just wanted to highlight here that we really can't be operating just off of the worksheets and not taking any look at the instructions, because we have to look at definitions for items, making sure that we understand what's supposed to go there. And cash compensation has probably been one of the biggest questions. What is compensation? What's included in it? What's excluded from it? So we don't want to miss some of those things within that definition. It is gross wages, but there's certain gross wages you can include, like leave under the FFCRA is a key one there. Additionally, can't enter an amount more than $15,385 for any one employee for the period. So just always need to be watching that, always key. In our tool, we've taken a couple of these calculations here in this great amount of detail and turned them into additional worksheets so that we don't have to manually go through these lines and calculate. If you've done that already, you're my hero, good work, but we're going to try to make it a little bit easier for everyone else. And so it's not so punishing a process. So we're going to just breeze over the rest of the instructions here and take a look quickly at the Schedule A worksheet before we jump into the example. This is where we're going to spend most of our time while we're gathering information and summarizing it. This is information that has got to be done by employee at that level. We can't summarize it. We gotta break it out. And additionally, we don't just dump all employees into one table. We have two separate tables for employees, and then also an additional place to track our owners. And we'll go through that in the example here, but we're really just going to have to break out that payroll information and be entering it here in multiple places. So it's this is where we're going to spend our time. This is what's going to take time tallying up all the costs for that 8 weeks and then summarizing. And then from here, that summary information flows back up through the other two calculating schedules that we saw earlier. All right, the last page I want to talk much about here is just page 10 of 11. Here is where we have our list of all the documents that we're going to be required to submit. Lots of questions came about, what do I need to track? What do I need to have ready? I think we gave pretty good answers around that, but we just wanted to hear it from the SBA and know what we did need to track and what we didn't need to track. So I would say if you don't print any other pages, at least print this page of the application and start gathering this information so that you're more prepared when you go for forgiveness. We don't have to go back and dig it all out again. Of course, we're going to need supporting documentation for all expenses that we claim. For payroll, that's going to include our payroll reports and records, our tax forms that we file, our quarterly tax forms, our unemployment filings to be able to claim the amounts that we are claiming for the unemployment insurance there. Additionally, those payroll reports should have hours information showing the basis that we determined for our full-time equivalent calculations. And that's going to be different depending on which look-back period you choose. So we're just going to have to take that step by step and have all that documentation ready to support the number that we came up with. And the same thing is true for the non-payroll costs. We need to be able to show that we were billed for those costs and show that we paid those costs, whether that's a canceled check, an invoice, a receipt, whatever is applicable for the utilities and the rents and the interest there. Additionally, we're going to have an old invoice that we dig out for each of these areas. Everything needs to be shown that it was in service in February. It was in service prior to February 15th. So we're going to have to go back and get a February account statement to be able to show that was not a new vehicle lease that we went out and got in April or May, but that this was something we've been paying in the past. Last section here of the documents is documents that you need to keep track of but not actually submit to the bank. So useful to be able to see that delineated there. Some of the documentation that's probably most important was the exceptions that Karen referenced earlier. We have now exceptions for anyone who refuses an offer to be rehired, or if someone was fired for cause, they voluntarily resign, or if they request a reduction in hours. All those things aren't going to hurt our FTE calculations. We have to document that. We have to have that in writing, but at least we can just keep that in a file. We don't have to add that to our package that we're sending to the bank. So the last page here, I just want to mention briefly, is an optional one, just a census demographic information. So not anything important happening there on page 11, so I won't spend time on that. Switching gears now to our new tool. What we've done here is try to take what's going on in that application and put it into an Excel format that mirrors this application as closely as possible. So this is what we had just looked at, the informational section and the calculation section of the SBA's application. We also have the Schedule A and the Schedule A worksheet, just verbatim and following what they have. But the difference here, of course, is that you can actually enter amounts here. The form from the SBA isn't even a fillable PDF. So not only doesn't it do any calculations for you, it's just a very manual process if you're going to print that thing out and try to walk through it. So we're trying to do a little bit of the legwork here for you, give you fields that are highlighted green for entry fields, and then also have some fields that aren't highlighted that are just pulling information from other schedules or performing a calculation, so that you can be able to go through this forgiveness application, look at the application, look at this tool, and see exactly line by line, this is verbatim what's on the application. And our hope then is at the end of the day, if we're submitting that actual application, this then can be what we attach to that application. We can be able to add lines, insert detail for all of our employees, and then be able to make this a really functional tool for submission. So let's just go through this form quickly again and look at this example that we have already. I've already talked a little bit about the entry of this information on the first page, so we won't talk about that again. The calculation, again, down here at the bottom, is broken out into all of our qualifying costs, the reductions, and then finally we end up with a forgiveness amount. We're going to start at the bottom and work our way back up to here and see how we get to our $57,000 number. So we'll move back to the next form, Schedule A. A lot of calculations, a lot of information pulled. Let's get back to where that information started, the Schedule A worksheet. So again, this is where the rubber meets the road. This is where the work is going to be happening. Maybe you only have 3 employees, maybe you have a lot more, and you're going to need to add and insert a lot more rows and keep pulling in new information. In any case, this is the summary of that payroll information. That's the detail that's going to cause you the most amount of legwork to be able to gather and summarize here. So let's just review how this is laid out one more time for the SBA. We've got 2 different tables for employees. We can't just dump them all in one place. And then in addition to that, we have a separate schedule for owners. No owners should be included on these 2 tables that are provided on SBA, the Schedule A worksheet. So why are we separating these things into different areas? Are they just trying to make it difficult for us? You know, it seems that way sometimes, just the crazy format that this is. But there's somewhat of a method to the madness. The more I looked at this and worked through, it became obvious why they were breaking this out into different areas. Each of these tables has one less column. This first table has the salary and hourly wage reductions. And the next table does not. It doesn't apply. And then again, for the owners, we have even one less column. The wage reduction and the FTEs are not applied for the owners at all. And that's by design. There was a method to the madness. And the reason for that is because we don't calculate owners in our FTE equation. That was another new piece of information that we learned here through this application process. So that's for the look back period, also for the 8 weeks. Owners are not included in either of those. So if you added an owner, if you lost an owner in that time frame, it doesn't help or hurt you. Additionally, then the real breakdown between these two tables for non-owners is how much did they make in 2019. So we see the SBA direction here. If you receive compensation from the borrower at an annualized rate of less than or equal to $100,000 for all pay periods in 2019, or just someone who wasn't employed at all in 2019, those are the employees that we include on this first table. Everyone under $100,000 in compensation. And then of course, the reverse is true down here. This is for everyone that made over $100,000 for any pay period at an annualized rate. They're landing down here. And of course, the difference between those two is those two groups have this wage and hour reduction attached or not attached. And it makes a degree of sense. The law was written in such a way that said, well, we want to protect this group of employees, those that aren't as high wage earners. We want to be able to make sure that there's a penalty if employers cut their rates of pay during this time. And that's what this is. If someone's been making over $100,000 and their rate of pay is cut, well, we're not protecting them from that happening. We're only going to protect people under $100,000. So that's why this applies just in that class. So those are our couple of tables. Most of this is starting out easy and then gets hard, if you haven't noticed. And the same is true here on the table. We enter the employee's name, we enter the last 4 digits of their social, we enter their cash compensation for the 8-week covered period. So far, so good. Cash compensation requires a little bit of work, but we can get there. But then we get to what's their average full-time equivalency and what's their salary and hourly wage reduction, and things get a little bit harder. So we'll jump back to a couple of other pages here to be able to help you get to those numbers and to those information. So I think first we'll go ahead and jump back to the average full-time equivalence page, since that's the next column. What we've done here, this is something that is in narrative form in the application, but they don't actually provide a table or a calculator by the SBA to do this. So that's what we've done here to be able to calculate your average FTE for that 8-week period and be able to apply both methods. Just as Kara mentioned earlier, we got some new information and we got a new method as well. In fact, we got 2 new methods. If you have done full-time equivalency calculations, I'm sorry, we got to throw them all out the window. If you have a payroll report from an ADP, a Paychex, any payroll provider, that report is now not usable for these for the PPP FTE counts here because they came up with completely new ways. It would have been just too easy to follow the Affordable Care Act rules, so we of course couldn't do that. Instead, we came up with 2 completely new methods. Instead of using a 30-hour threshold, we're now using a 40-hour threshold. Instead of rounding down to the nearest whole number, we're just rounding to the nearest 10th in our calculations. And then on top of that, you can throw the new method out the window and have a simplified method where we just take 1 for anybody who works over 40 hours and a 0.5 or a half for any employee working less than 40 hours. So a simplified method, but really it's just adding more work because you have to calculate it 2 different ways. Hopefully this gives you a little bit of an easier process of doing that during the 8 weeks. So as long as you can pull your payroll reports for that 8-week period, look at the number of hours worked for each employee, enter the number of weeks that they're working, then this table will calculate what their average weekly FTE becomes. And you can look at what that gives you for each method in total. And from there, this information then is what comes back and is summarized and entered back here on our tables for the average FTEs for each employee. So hopefully this will be a pretty useful tool. And again, we can be inserting more rows and adding more to this calculation as we have more employees. But again, we want to make sure that we are comparing and looking at this multiple ways. We have multiple look back periods as well. So I think probably the most hair pulling out is going to occur around these FTE calculations going forward, partly because everything we might have done to date now doesn't matter, and also just because we also are just need to do it multiple ways now, and there's a lot of exceptions. This is a good time for me to mention that on our worksheet, the exceptions that Karen mentioned for an offer of rehire that was rejected, or someone that's fired for cause, those other exceptions are then added to the SBA's worksheet right here. And this is kind of buried in the bottom of one of these forms, so it can be easily missed, but that's mechanically where we are going to add any exceptions that are based on those written documentations that we have. So that's FTEs in a real brief summary. Before I move on from FTEs, I should mention the reduction safe harbor once more. On the bottom of the Schedule A worksheet, we receive a calculation to be able to determine, have we restored any reduction? So if we made layoffs during this time, as long as we can bring back that head count by June 30th, we're okay. All that work that we did to calculate during the 8-week period doesn't matter, as long as we've restored our head count by June 30th. So I know that many of us are in that boat, and we're aiming for June 30th, and 8 weeks isn't really a practical time to be able to calculate that. So I want to make sure that we don't forget about that safe harbor that is still there. That covers most of these columns. The last column we have on our Schedule A worksheet is for the salary and the wage reduction. So we took the details out of the narrative explanation and created an actual calculation here, just following what is in the application verbatim. I don't want to spend a lot of time on this page though, because I don't think it applies to very many of us. It's an area that caused a lot of confusion. There was a lot of arguments about interpretation originally, and this was really cleaned up by giving us this calculation and made it clear. But I just want to cover it at a high level and say, if you are cutting someone's rate of pay, we have to consider this calculation. But we only have to consider this calculation if the pay is reduced by more than 25% for anyone. And that means just like Karen said, a salary at $100,000 can be reduced, but it can't be reduced more than 25% unless you are going to have to worry about this calculation. And the same is true of hourly wages. And I just don't think we did a lot of that. If you were paying someone $20 an hour before, I doubt we were cutting anyone's rate of pay to $10 an hour and making them subject to this calculation. If that's something you did, then we need to cover this worksheet, but that's what it's talking about. It's not talking about cutting someone's hours from 40 down to 20. They're still making $20 an hour. Doesn't matter how many hours they're working, their rate of pay has remained the same. This reduction does not apply to you. For the purposes of an example, we chose a reduction just to see how it flows through. We had our employee with a salary at $75,000. We cut that in half. So that's a 50% cut. So that's a little more than the 25% that we're allowed. So this flows back up and we end up with a wage reduction calculation for Larry. So again, didn't want to spend an awful lot of time on that just because I don't think many of us have really cut salaries that deeply or cut rates of pay that deeply, but wanted you to still, of course, be aware of it. From here, then, we start flowing our information back to the front of the SBA's application form at long last. The boxes here that have our totals, boxes 1 through 5, flow forward into our Schedule A. Now, there's not a lot of green here. We're not doing data entry. We're pulling box 1, 2, 3, 4, 5 from the prior schedules. What we do begin to data enter on the actual Schedule A are our other payroll costs, which start to look a lot easier after we got through the rest of this. Our other payroll costs include the employer portion paid for health insurance, employer portion of retirement plans, employer paid state and local taxes, which is basically PA unemployment compensation insurance here. Additionally, we are pulling forward what we have from our owner's compensation. And we created that separate table just because that's what the instructions tell us to do. If we have more than one owner, we can just enter the amount here directly, but more than one owner, we need to insert a separate table that lists their names and payments to each. So we just included this so that everyone has access to that easily. So this totals up when we finally get to our total payroll costs once we add all that information together. The bottom item here is where we get our full-time equivalency reduction calculation. We calculated our full-time equivalents that pulled from our average FTEs on the prior worksheet. We added these FTEs together, pulled them forward into our Schedule A. We're at 2.5 for our 8-week covered period. And you get multiple different ways to look at a reference period and look back. In this example, we had 3 full-time equivalents in our best reference period. So we're looking at a reduction because our head count is down. We divide these two numbers together and we come up with our reduction quotient. It's an 83% rate because we're at 83% of our head count for the look back period. So that's going to hurt us. And that's going to pull forward then from the Schedule A back to our page 1 and our forgiveness calculator. So now that we've done the work there in the prior forms, we're finally seeing where this information comes from on the first form. We've got our total payroll costs after going through those calculations. We also now enter our interest, our rent, and our utility payments here to get our total eligible costs. And then we apply the salary and hourly wage reduction. If we cut rates of pay, that's what's showing up here. We cut Larry's salary in half, so we have a reduction. We total these together, subtract that reduction, we get to a subtotal here before we apply that 83% quotient because we reduced our head count. We don't get the full $69,000 we paid forgiven. We got to reduce that by 83%. 83% of the 69 brings us down to 57,000 through the calculation. So this is then our final area of limitation. We can't have what we pay be forgiven any more than the loan amount itself. And then we also can't have an amount that is inflated by non-payroll costs. And this is basically calculating the 75-25 rule. If this is our total payroll costs that are qualified, then this is the total loan amount that we can go for. Now, of course, we don't get that by the end because we picked the lesser of these 3 numbers to be able to limit our calculation. So this is obviously not an ideal scenario. If you're the business owner, if you're trying to maximize this calculation, we look at a calculator like this and say, boy, we want to fix this. We want to find ways to make this work out a little bit better and get the full 100,000 forgiven instead of the 57,000. So of course, the easy place to start with this is just to eliminate some of the reductions that we had. So if I jump back here to my wage reduction calculation for Larry, well, we cut his pay in half. That was a little harsh. Maybe we don't have to be so harsh to Larry. Maybe he's still working hard enough and we can afford to do this because we have our PPP money. Let's just cut his salary to 60,000 in the 8-week period. Well, he's now only reduced to an 80% of his salary, a 20% reduction. That's not up to the 25%. So there is then no reduction caused for him. So we don't have to calculate that for him here. Additionally, maybe we had someone that had voluntarily quit in the first week because boy, they were worried. They didn't want to work anymore. They just have underlying health issues and they just can't feel good about coming to work. And they voluntarily quit. Well, that's an FTE reduction exemption. So let's go ahead and get rid of our FTE reductions by noting that, hey, we had an exemption here we can certify, we can use. Now, when we pull through this information going forward, our quotient is improved. We don't have a reduction. Back to page 1, there's no pay cut reduction anymore. So we just get the full amount of what we've paid on qualifying costs. The quotient isn't a reduction here. It's just a one instead of a percentage here. So we don't have any reduction for reducing our head count either. We get our full $71,000 that we've actually paid. So that's great. We've improved. We've understood that our reductions were going to happen, and we took steps to be able to eliminate those. And you can do that, of course, in lots of different ways. We're still not to that $100,000 though. So boy, want to be able to get there, want to be able to maximize this. So let's try to keep working on this. Let's go back, and maybe we've done our calculation. We still had a week or 2 to go. We still had a couple payrolls that are going to happen before the end of the 8-week period. Well, there's nothing restricting us this time from paying bonuses to our employees and using some more of that cost Otherwise, we're just going to be repaying that loan, and we don't want to have to do that. If we could rather give that same money to our employees, the only restriction on doing that is the amount of the 8-week cap. This number that keeps coming up, 15,385. That's 100,000 annualized for an 8-week period. So let's go ahead and make some bonuses. Let's pay Mo $10,000 more. He did a great job. Let's pay Curly $10,000 more. He did a great job. We're just increasing that compensation. And Curly, well, he did a great job. If we paid him $10,000 more, though, we're over that 15,000 level. So this cell is yelling at us. It's conditionally formatted to turn red if we go over this threshold. So we can just pay him up to the cap, 15,385. All right, we've paid out some bonuses. We've maximized our compensation. We knew where we were coming in at. Now, if we go to our calculation form, we've maximized our loan forgiveness. Even though in total now we've actually spent more costs slightly than what we had in our loan amount itself, of course, we're still just limited to our loan amount. So that's going to be always the lowest of these three numbers. So this is hopefully a practical tool for you to be able to understand these scenarios, to make some of these decisions, and then to be able to, of course, at the end of the day, use this as an attachment to your actual application. And then I think in some cases, this probably will actually be the application, the one, the 11-pager that just came out. As I think I said earlier, I'm sure some banks will have a portal that you'll be just entering this information in the bank's format, same data, but maybe uploading it in a different way. While others, I'm sure, will just literally use the SBA application. So we're going to need a way to be able to track this, to insert and add as many employees as you need, and have something that's actually doing some of this work and calculation for you rather than a manual process by looking at the application itself. So thank you for sticking with me through that and walking through these things. I know there's certainly a lot here to absorb, but our hope is that we've created some tools that are useful to you and that are going to be able to help you in this process to be able to fill out your applications, to be able to plan here in the coming weeks. And hopefully that's going to be a useful thing. We just appreciate everyone for joining us today. And hopefully during this time too, you've been able to enter in the live chat and get a lot of these other questions answered. We're going to be continually updating our resources. We'll have additional FAQ posted on our website, and we're going to revise what we already had out there based on the new guidance that was just received. So I'm sure this won't be the last that we hear about the PPP and the loan forgiveness rules. So our whole team here, our response team, is going to continue to monitor these changes. We're going to keep those tools and resources up to date for you. But on top of that, please don't hesitate to reach out to your contact for help with these calculations, for help with data gathering, and also just for us to be a second or a third set of eyes on your information. There's a lot going on here. There's a lot of areas for risk. So we want to be able to be that support and that resource for you. So we are so glad to be able to help, and we hope that this program turns out to be a great thing for your business. That concludes our webinar for today. Thanks again for joining.